Hello, and welcome to another episode of Be a Leader podcast. We talk about current events in sports, military, and business through the lens of leadership. And I'm going to tell you a story today. It's one of the wildest business stories I've ever heard. And by the end of this podcast, you'll know why we're talking about it in this episode of Be a Leader podcast. There's a 24-year-old named Leopold Aschenbrenner. He came from Germany when he was in his teenage years. He came for college. He graduated from Columbia University as valedictorian at age 19. He's brilliant. He's a super smart kid. He briefly worked at OpenAI, who makes ChatGPT. I'm sure you've heard of them. And he was on a team that was focused on making sure AI does not go rogue. A very valid concern. However, he got fired from them in 2024 for sharing some information that the company deemed was sensitive, overly sensitive. So what do you do when you're 24 years old, you're super duper duper smart, you graduated valedictorian at Columbia at 19, you worked at OpenAI, like, what do? You write an essay, of course, like a big 165-page essay talking about the dangers of what's ahead. He called it situational awareness. The decades ahead is what he called it. And I have to pause here because as a Marine, situational awareness, as we call it SA, is something we talk about all the time. You never fully have. The battlefield is constantly evolving, and so you're constantly trying to understand what is going on in the battlefield. So we're always filling in. It's just a concept. It's a term we use all the time. So I think the name for his thesis is perfect, spot on, but it almost became prophetic of his own story for reasons we're about to get into. So his essay argued that AI was going to accelerate faster than almost everyone believed, and that the world was badly underestimating what's coming next. And the essay went viral. Michael Dell was sharing it. Ivanka Trump was sharing it. And instead of just writing about it and just taking the praise or the attention, Leopold did something very remarkable. Okay, he put real money behind his thesis. He started a hedge fund, right? Raised money in a hedge fund, try to make predictions and make more money. He started a hedge fund. It was also called situational awareness. Okay, and he did this without any professional experience in investing at all. Nothing. He didn't have any experience, but he is super smart and he knows things that no one else does. Right? He's got the situational awareness. So he got early backers, right? This was not just plain money. Like he raised $225 million for this fund, which is not a small amount. He had backers like the Carlson brothers who founded Stripe. He also got the two guys from Meta AI's effort team also backed him up. And eventually Jane Street, they're one of the most sophisticated trading firms on Wall Street, a firm that almost never invests with outside managers. They even invest. They became a major investor in situational awareness. And for about 2 years, Leopold looked like a prophet. Okay. By May of 2026, his fund had returned about 270% after fees that year alone. We're talking about January through May, 270%, and over 1,000% since inception of the fund, just roughly 2 years before that. Assets grew past $20 billion. And by early July, the fund's value reportedly reached $45 billion. Right? Not bad for starting at 225 million, right? So people were started giving him the nickname, the Nostradamus of AI. And his routine regulatory filings were studied online like scripture. People were looking all over them. One stock jumped 23% in one day just because investors were able to find out that he bought it. That's how much impact this young man had. But here's the point, that there's always some kind of twist in the story, and here's the twist in the story. Okay, he wasn't just making bets on which technology companies were going to move up. He was also borrowing heavily to make those bets. We call that leverage. He was borrowing money so he could even bet even more money. That wasn't his. Okay? For every $1 of his own capital, situational awareness was borrowing between $3 or $4 or sometimes even more to supersize these AI-related stock picks. And by the end of June, here, 2026, this was a few weeks ago, right? 56%, over half of his entire portfolio was just on two companies alone. SanDisk, and Micro. So not very diversified. And then July happened. And this is where it's been on the story in the news, Wall Street Journal, for weeks now here. July happened. The AI stocks started to sell off. Okay. Prices were going down for what the stocks. His positions were so levered with his borrowed money that the lenders that he was borrowing from demanded more capital. It makes sense. You got to have some type of, collateral. They need more collateral. Like, where are you putting this off of? Right? Where are you putting it off? They demanded more collateral, which forced him to sell because he didn't have the capital or the collateral. Right? He had to sell. And what did that do? That pushed the stock prices of those stocks even further down. And then, as you can imagine, once people started realizing what was going on in Wall Street, they realized he was in trouble. And then they started to shorten the position, which means they were placing bets that it was going to go even further. And then things started going even further because more pressure was starting to sell. He called it himself like a bank run. Essentially, when there's panic and people start withdrawing money and people are afraid that there's going to be no more money in the bank, so they just keep going, withdrawing and drawing, and it is a virtual cycle of continuation till it's dry. That is what essentially happens. But it gets better because this is what makes it feel like a movie, okay? His wedding guests were literally arriving to Carmel, California the same week for his wedding when all this was happening. Okay. While the guests were showing up for his wedding, his team was spending the night with two of the biggest hedge funds trying to figure out someone to bail them. They were working with Citadel and Millennium just to try to figure out something so that he could finally actually have his wedding, right, in peace. And just before the market opened on July 30th, Citadel agreed to buy the majority of his stock portfolio at a big discount of more than 10%. Jeez. The fund in July lost 67%. It lost 2/3 of all its assets in 1 month. Citadel, on the other hand, made billions of dollars almost immediately because many of the exact stocks that they bought from him rebounded and price went back up within days. Jane Street, which we talked about earlier, who put that stake in situational awareness, had grown from 2.5 billion to nearly 10 billion at its peak. But after the collapse fell between 3 and 3.5 billion, they had the worst month ever. They lost 15 billion in that month of July, largely because of situational awareness and all the connections around. But here's the thing that's interesting. You think, well, we're probably done by now. No, situational awareness was not wiped out. Okay, interesting twist, because the early gains were so enormous, the fund was still up 80% for the year, even after losing 67% of its value in a single month. Just almost doesn't make sense. So here's the question that we're going to dive into today. How does someone so smart and capable as Leopold, okay, someone who is right about so much prediction of the future, end up in this position? And what does that mean for the rest of us who aren't that smart? Okay, we're okay. We'll be okay. But let's get into it. Let's see what we can learn in this episode of Be a Leader podcast. So the first lesson is success can be more dangerous than failure. What does that mean? Failure. Again, failure is an assessment. It's a story we make. We have a judgment call on what we think is success and what is failure. So failure, when we don't get what we want, it forces us to have some kind of feedback loop. It makes you stop and re-examine what happened. Why did I not reach the success that I was expecting? Okay. Success often does the opposite. It often validates whatever you were doing, even the dangerous parts. We got away with it. It must not have been that bad, right? We can do it again. So situational awareness did have a stumble in early 2025. An investment in a Chinese AI model kind of spooked the market. It could have been a warning sign, maybe of being over-levered, but they recovered fast. Situational awareness recovered fast, and they were still up the year 200%. Like, it's amazing. When you think about the averages of the S&P 500 usually being, between 11 and 13% a year, they were up 200%. Okay, so that kind of remarkable result does not teach caution, right? It just tells you keep going. And by May 2026, as I said before, they were up 270% of the year alone from January to May, up 270% and over 1,000% since the inception of the hedge fund just 2 years before. That's not just a track record, okay? That is a fire hose of positive reinforcement. It's like you can't do anything wrong. So this is where it connects to my IBR framework, identity, behavior, results. Okay, we should have very strong, clear, strong identity, behaviors that match it, and the results will speak for themselves. But here's the reason why I go to my IBR framework, because results does not prove good behavior. We covered that last week in my episode of Be a Leader podcast. We're talking about University of Michigan Athletic Department. They were looking at the results of winning, but they realized there was a lot of bad behavior leading to a culture that was just chaos. All right, so see that episode if you want to hear more about that. So results does not prove good behavior. Okay, doesn't matter how good the results are. Right? You can make a reckless decision and get bailed out by a great outcome. Okay, we see that all the time in sports. Think about college football. There might be a team, and it's a good team, and they're down, and they win at the very end by a last-second play. And they're elated, emotionally so happy that they didn't lose, that they won that big game. And then the next week, they played terrible. Why? Because they had that positive reinforcement that we can get through it and just win it anyways, right? They're so focused on the results, they don't focus on behavior. It happens everywhere. It happens in high school, it happens in college. I've had it happen to both me and my high school teams and in my college basketball teams. We see it in the pros. It happens all the time. So we saw it with the San Antonio Spurs, right? They lost the first 2 games to the Knicks. They won game 3. They thought they had it, and they had the worst flop ever in game 4 when the Knicks came back and won that game, okay? So this stuff happens because the outcome can lie to you about your decisions, about your behaviors. And again, here's the key point. Failure asks you to explain yourself. But success often gives you the permission to not ask any questions. It works. Okay? That's exactly the moment you need to ask the most questions. That's why success can be more dangerous than failure. And that's something I learned about in the Marine Corps, that we had these after-action reports after every major exercise, training exercise, or some type of execution in combat. You were constantly doing the after-action report to see what can we learn from this? What are the good things that happen? What are the bad things that happen? That way we grow. But it takes a lot of discipline, I will tell you. Takes discipline, because I remember as a young Marine Corps officer, sometimes you're like, it worked. What do we need to talk about? Let's just do it again. There's always something to learn. And if you have that learner's mindset, you will continue to grow and you'll be a great self-leader, leading others and leading leaders. I'll tell you that. So let's move on to lesson number 2. And that is, every strength has a shadow. It has a dark side. And we don't want to eliminate it. We want to learn how to govern it. Okay. So let's go to Leopold. He's super smart, very, very intelligent. Right? It's strength. But again, all strengths have dark sides. You have strengths that have dark sides. I have strengths that have dark sides. His brand was built on this one idea. I see what others don't see. And in his essay's own words, he said there's just a few hundred people that understand what is going on, that actually have the real situational awareness of what's going on with artificial intelligence. And he's one of them, is what he claims in the essay. So let's be clear. His strengths, being very, very smart and having an understanding what he believes the future is very powerful. It helped him be able to create this fund, to be able to raise $225 million, to be able to have 1,000% returns, to get it to $45 billion. Like, this is incredible. He's really good. But every strength has a dark side. So let's not overshadow the strength. The strength is very important. But what we need to bring to light are the shadowy parts, are the dark sides. Okay, we all have them. You just need to be careful that your strength doesn't go too far to where it hurts you. That's the key point in all this. For him, his trap was his identity. I'm the one that sees things that others don't. And so any type of information that contradicts that, well, it kind of fits like, who are you to say? Especially when you're doing so well, they become threats. Right? You're seeing where this dark side can happen. There was evidence that did warn him. Okay. Axios March 2025 note warned investors to be wary of, the quote is, hubris leading to risk management issues. They thought it was hubris the way he operated. And there was also some investors that were warning him directly about the leverage, again, borrowing too much that he was investing. There was a prime brokerage executive who passed on the fund. And they said that this unshakable confidence was a red flag. Okay. It's a red flag. What makes it a red flag? How can unshakable confidence be a red flag? Well, if it's unshakable confidence, it can start getting to the point of arrogance. And it's a point of arrogance because you're not being aware of what's going on around you, right? Which is, in other words, you don't have the situational awareness of what's going on, right? That's where the arrogance fits in. Okay? You want confidence. You want confidence under pressure, but you also need to make sure that you have situational awareness so it doesn't become arrogance, because arrogance is dangerous. That's the irony. So, again, his danger. The more his identity became, I see what others don't see, the harder it is to start to notice other things. When someone else can see stuff you can't see, because I'm telling you right now, you can't see it all. Blind spots are there for a reason. Your eyes go here. You got a bunch of blind spots, not only physically but in your life. That's why we all need mentors. That's why we all need advisors. That's why we all need coaches, depending on where you want to go in life and how big your goals are in life and the impact you want to have in this world. We all need support to be able to help us see things that we can't see. And again, the key here is not to eliminate your strengths, your dark sides of your strengths. They're just part of your strengths, okay? Because then you're going to be spending a lot of time, okay? A lot of effort. It's a waste of your time, and you're not focusing on your strengths, okay? But you need to have support. You need to have guardrails, the bumpers when you're bowling as a kid. Or like me, because I have such a hurt back from the Marine Corps, I can't really bowl anymore. The twisting motion gets me. But we all need something to help us so that we can stay brilliant at our gifts, our zones of genius. We all need that. This leads into lesson number 3. And that is, knowing the principle is not the same as living the principle. What does that mean? Leopold was on a podcast in 2024 with Dwarkesh Patel. And he was asked directly about what's the worst thing that can happen to this hedge fund. And I love his answer because it reminds me of when I was building my space hardware startup, and we were doing business plan competitions. And we were at a particular competition. We got asked the same thing. A judge asked, "What's the worst thing that can happen to your gallium nitride power conversion technology?" And we said, "It blows up in space." And everyone laughed but the judge, because it was kind of obvious, like, that's not good. It blows up in space. And it's hardware, right? But I don't know. I guess he realized it was a bad question. But that's exactly what Leopold said. The worst thing that can happen is that it can blow up. His quote verbatim was, obviously, not blowing up is task number 1 and number 2. Okay. So he knew it. He knew to say the exact right things. But 2 years later, it nearly blows up. What happens? This is the gap that every leader has to reckon with. Knowing what good judgment looks like in theory and actually living it when the pressure is on. That's why I coach confidence under pressure, because when the pressure hits, everything goes away, your identity is revealed, and your basic level training is revealed. That's that gap. Good judgment when the pressure is on, but even more so when the pressure is on, when the praise is on, when you're getting praised, when all the momentum is telling you, keep pushing, it's working. That's the gap between knowing what you should do and what you're actually doing. That's the gap. Clarity about the danger is not the same as the discipline against it. He had clarity, but he did not have the discipline, as smart as he was. That's where my IBR sits in again, identity, behavior, results. There needs to be alignment, just like you need alignment between a very clear, strong identity and behaviors that match it that leads to the results. You need to have strong alignments between what you know you should do and what you actually do. The behaviors have to match. And this is exactly the type of gap I work with people in my program, Confident Leader Bootcamp. Almost nobody I work with lacks knowledge. They know what discipline looks like. They know the hard conversations they need to have. They know the risks they are carrying that they shouldn't be carrying. But the hard part is not knowing. Building the muscle to live it when the pressure is on. That's the hard part, especially when everyone is telling you to keep pushing. That's the hard part. My next cohort, this is the 3rd time, and the last time I'm doing it for 2026. I've had great results for my clients that join these programs. My last one starts mid-September here in a few weeks. If you've got the clarity on what you should be doing, but you are struggling to have the discipline to execute it, then I invite you to consider joining our last cohort of the year. And you can find more information, the details of this podcast. You can also go to my website, danielpinedo.com. And with that, let's bring it home to the end of this episode of Be a Leader podcast. And I'll grab my college basketball whiteboard. I got my key points for this episode. And the first point is success can be more dangerous than failure. Failure makes you ask tough questions, but success gives you the permission not to. And that's where it can be dangerous. Always start asking the questions of what you can improve on, and that's how you keep growing. The second one, every strength has a shadow and needs governance, not elimination. Again, his strength, his smarts, his conviction is what built the fund in the first place. Okay, it's extraordinary, but unchecked, it nearly destroyed it all. And not just him and his company, but all the people that spent a lot of money on him, their investments, their future, the future for their families. A lot of people's future was at stake here. It's a big deal. Third, knowing the principle is not the same as living. This is what we finished up on, right? He said the right words in 2024, but the pressure in 2026 tested whether he actually had built the behaviors for it. And we saw that he didn't. He had to go get saved, right? He had to get saved. He lost a lot of money. And so that is the third principle of this episode of Be a Leader podcast. So here's what I want you to sit with this week. Think about this. Where in your life do you already know the right answer and just haven't built the discipline to build it under pressure? Where? If you're honest with yourself and you have not built that to close that gap, then I encourage you to reach out to someone you trust. Okay? We don't live life alone. Get some help to build it, because we all need the encouragement and we all need help in our journey. And the nice thing about this episode is there's so much to talk about. We're going to talk about it in another lens next week. Next episode, we're going to talk about, because now we talk about Leopold, but we need to talk about the companies, and not just situational awareness. We need to talk about Citadel, how they had the freedom to choose. This whole episode reminds me of things I learned early in my time in the Marine Corps as a Marine Corps combat officer. And so we're going to have another episode to look at a different lens. So I encourage you to check that one out. And as we finish this episode of Be a Leader podcast, thank you for watching. Please share it with someone that could find useful. Please give it a 5-star or thumbs up so it helps with the algorithms. And I'm curious what your biggest thoughts are. What's your biggest takeaways? What's your thought about Leopold? What's your thought about losing 2/3 of a $45 billion fund because you lack situational awareness when your company is called Situational Awareness? The irony there is just hilarious. Okay, so thank you again. And remember, whether you're leading yourself, leading others, or leading leaders, be a leader. My name is Daniel Pinedo. Thank you. And until next time.